Hello. I thought I would, at the beginning of January, I recorded, so it was about 5-6 weeks ago, I did a YouTube video of the 10 kind of favourite altcoins that I thought were set to bounce or have a really nice swing trade set up. So I thought this evening I'd record an update of those and see how we did. So I'm going to start with Bitcoin, because Bitcoin wasn't on my list of 10, but it's a good explanation of what happened to my list of 10, because 9 out of 10 of my trades, well actually no, 8 out of 10 of my trades ended up being scratch trades. So what's a scratch trade for me? A scratch trade for me is when your trade goes a certain amount of distance so it doesn't become a loser. It goes, enough of a way so that you move your stop up, but it doesn't turn into a big swing winner. And so when I look at the list of coins that we recommended last time, here's my list. Most of them were scratches. We had a 100% return on Luna and a 10% loss on Ftm. That one really didn't go anywhere far enough that you would have been able to protect yourself. And this 5 are my new ones to add to the list to watch. So I'm going to start with Bitcoin. We recorded the video around the end of January here, and so you can see we pretty much had a nice rally and everything. So on the 30th, so if we look at, we're just going to update what happened to the ones that I recommended, and my chart's moving very slowly. So we looked at it on the 30th of January. If I put regular candle, 31st of January, if I look at ETH and the closing price on that day, we were, the close that day was, 27.87. We rallied all the way up to the daily 50 moving average and the 61.8 level that we said was resistance. So we hit our first resistance and reversed there. So that would have been a scratch trade, because you would have bought it down here, and when it reversed at the first resistance and came back, for me, normally if I'm trading it on a daily, one red Heikenhashi, I'll put my stop underneath that, or I will put my stop underneath on a regular candle close underneath the 20 moving average, which would have been here, same price. So unfortunately that was a little bit of a scratch trade. I was looking at this being a good setup because we had made an equal measured move correction in F. I actually still think this is a good setup, but I think we're looking at a retest, and so we need the retest to see, and if that holds, I'm going to be recommending it again, later in the month or when it holds. So that's what I'm looking for, this equal measured move to be retested. First time back to our moving averages, they were the wrong way round. Very often when you have that, you have a retest of the lows or the highs before you get going again. So that's where we are with ETH on the list. The next one that we had was Mana. And Mana again was very frustrating. So one of the reasons that we like Mana is we had also made a very nice ABC correction back to the 200 moving average on the daily. I think that this one has lost, though, this support, and I think for the first time today we're going to be closing underneath that 200 moving average, which is the first time this year. So this was another scratch. We recommended it on the 31st of January, which was here. We went, if you'd waited for the pullback, you would have got here. If you hadn't, you would have had your stop much lower down. Once we made an ABC, though, and we came back, and it rolled over, whether you were trading this on the daily with these red candles or back underneath the 50%, or if you'd been on the 4 hour and trading it with Heikenhashis, which is what we like to do. This double top here would have been a bit of a warning. The break of the lows would have been your exit here. And so yeah, we'd have bought it here. So a scratch, really. You wouldn't have lost money, but you certainly weren't going to, it's not a lottery win. Now, do I still like Mana? No, I don't like Mana under this 200-day moving average at the moment. And I think that there's a risk that we do another swing lower to retest the lows and maybe a slightly lower low and this 786 fib level. And so I'm going to sit out and wait on Mana. So Mana's off the list for now. Next we come to our big winner, which of course was Luna, which is up 100% from the entry price, even though we're coming back now. So let's put this on because I thought Luna would be hopefully starting a big wave 5. So this wave 4 was a big 3-wave correction. The 31st of January, which was when we licked it, was actually the low candle here, right on the 200 moving average. So had we entered at the close price on that day, we would have ended at 51. This candle that we would have put our stop under the low of this candle, and it never got breached. And, you know, we made it all the way up from 51 to 103. And this previous high. Now, this previous highs and lows, you know, with our strategy are always really important points because that's where people very often take profit. And if you come back more than 236 fib from this, let's hide this, then you're likely in a bigger correction and back to this previous low. So if I put this on from here, and we put our 236 fib in, we're right on it now. If we close tonight under 90.16, we're likely to come back to these previous lows and potentially 50, a bigger correction back to the bottom of this wave 4, maybe to 75. Okay, so I'm watching 90, and I would close it, cover it there, and then wait and see on the bigger pullback if that happens. So pretty good support if we look at it on the 4-hour. We've got bullish moving averages. We're sitting on the 50 moving average, you know. I'm not giving up on Luna, but a close underneath 90.14, and I would take a lot of profit and wait for a bigger pullback, possibly all the way to 75. Now, if we look at it on the hourly, you know, we've got pretty good hourly 200 moving average support, so that's what I'll be watching out for. If we continue higher from here, I think, what did I say? The target should be 137. So if we can hold here, 137 for Luna. Otherwise, we have to wait for a bigger pullback. Still have the same target. Yeah, that's all. Okay, so the next one we're going to look at, which was a scratch, was sand. Do we still like it? Should we keep it on our list? So we'll keep Luna on as long. Now, sand is another one where, you know, when we looked at it at the end of the January, we were bouncing off this low, and we've come back and retest this low. We hit our first target in sand, which was this trend line and this daily 50 moving average. So, you know, where would we have got in? 3 points, no, up here. No, probably here when we turned off again. 3.6 and 4.6, so you know it went up 25% before it decided to come back. Hopefully you would not have let that be a loser, or you'd still be holding it. You know, don't ever let a trade that, you know, is a 25% winner come back and be a loser, you know, if you can help it. So that's sand. I still like it if the lows hold, so that's what we're going to be watching for, and we'll see. You know, it's so tricky. There's no chart for war, unfortunately. And because we don't know how the war is going to go, and we don't know how equities are going to go, I'm tempted to be bullish and buy the dip. I still like this as a big 3-wave correction. But, you know, they can be 5 waves. They can come back lower. This isn't quite in the same position anymore. I think if I was going to buy sand again, it would be on a break of this trend line and above this daily 50 moving average. That would be my entry trigger for this one. So I'd need to see it above 3.5, and then I would have it back on my list for a nice big swing and this big correction over. So on the sidelines for now for that one. AVAX was one. another scratch. The end of January was down here, 31st of January. So we are just, above the price that we would have bought it if you had bought it on the day that I recommended it, or later, or a pullback. We went quite a long way. I think you probably would have got out here, or if not, when it took out this low. Hopefully this is another scratch trade. Although it went, from my entry, which was at 70, we did get all the way to 100. So, that's 40% up before it reversed finally. Yeah, it just couldn't hold above these daily moving averages. For 40% probably wouldn't be what most of us would have got out of it, but it shouldn't have been a loser. It's not offside at the moment. Now, do I still like this? I do. I feel like this was, so we had a big ABC correction, and I feel like this is 1, 2, 3, 4, 5. These didn't overlap, and so we are in a 3-wave correction here, and then I think wave 3 should begin. So it's all a matter of when is that going to happen. Potentially, this 70 is good support, 69.59, but we could come all the way back and do quite a deep retrace. So I'm waiting. So what would be a trigger? For me, again, because of the way it's come back, I'd really like to see it not only above all these daily moving averages, but breaking out of this trend line again as well. So if it managed to do that here, if everything bottoms and we get back above that 200 moving average and that trend line, I'd be saying yeah, because I think this next leg should be really strong for AVAX. But unless we can do that, the risk is this is sideways and pointing lower. Okay, so let's take a look at FTM now. FTM would have been a loser, 10% loser. Let's talk about why. So when we looked at it at the end of January, which was, where was 31st of January? Here. So say we had bought this candle here, this nice little green candle here. We would have had a marginal new high, and then it would have taken out the low of that candle. For me, I think that would have come low enough to stop me out. So I would have had a loss there. So if I had bought the close price, it would have been 2.04, and if I had been stopped out of the low, 1.8, 1.9. So that for me would have been a 10% loser. Even though it subsequently rallied, if you held on, because it didn't really close at a new low, but yeah, I would have had a stop in anyway. Now, if you didn't and it didn't close at a new low, it would have been a scratch. But I think in fairness, like the way I trade it, that would have been a loss. So I'm going to mark it as a, I actually didn't get any FTM, and I can't remember why. I did XTZ and that didn't do very well, and I did Chiliz and that didn't do very well. I just didn't do this one. I didn't do all 10. I did, I think, 6 or 7. I think it's really important to have, a spread of coins that you buy. They're not all going to be the fly to the moon winner, but if you spread yourself out, you'll catch a couple of them, or at least one of them, hopefully. So that's where we are with FTM, and I'm on the sidelines with that one and going to wait and see. We are too far down now in a downtrend and underneath these moving averages, and I think unfortunately we've got further to fall. For this to be a Gartley pattern, a bullish Gartley continuation pattern, the ideal buy entry from here now is at 0.857, and potentially we could go down to 0.54, but 0.857 is where I'm going to be stalking that one, and I'll wait for that in FTM. Okay, in Chiliz, let's take a look at Chiliz. Now, on the daily, where did we look at this one? Here. So the price, let's put regular candles on. And the price here, the closing price on the day that we recommended it, was 0.1889. So we are trading above the entry price just, but this here would have, you know, even if you held, this would have stopped you out, wouldn't it? But again, this is another one that failed at the daily 50, and then when you close back underneath the 20 again, that's a retest of the lows. That's a no-no for me. So, you know, worst case, I would have been stopped out down here, and it would have been a scratch. I would have made zero. So yeah, Chiliz still making a base. I still actually, yeah. I don't think you know, this consolidation underneath this level, this previous support level is a little bit, you know, now we're underneath it, seems to be a little bit of resistance, and I kind of don't like that unless we can recover it. It looks to me like we're going to squeeze a little bit lower in Chiliz. Let's measure from this high to this low. There's the level that we were looking at. You know, if we can hold 153 and then have a strong bounce and take out these highs or back above the daily moving averages, that would be a good look. Yeah, I'm going to wait and see. As long as we hold above 0.1537 on this retest, I think that maybe if it does something strong, I'll look at it again. And yeah, we'll see what it does on the retest. XTZ, let's take a look at that one. That wasn't so if we look at it here, we were down here on the lows at the end of January, had a really nice bounce. This is another one, had a really nice bounce, came all the way back. So although, you know, we would have entered somewhere around 3.4, we got up to 4.5, so that's a 25% move. It's still a scratch because it would have come back, taken you out. You know, you're never going to get the absolute maximum that it travels out of it. You're going to see the reversal and then get out. So I'm going to call that, even though it moved 25% up, I'm going to call it as a scratch, because this was not the big swing trade that I was looking for. Instead, we've retested this level. Will we bounce again from here? Maybe. We could very easily hold this level, see another leg higher. If we did, our target, because we're bouncing from an 886 fib, our first target would be up here at 5.6. That would be a winner if we could do that. So this time again, I'm not going to buy it now unless we get above these daily moving averages and potentially above this pivot level at 3.62. Do I still like it down here? I do, but it's got to prove itself now in Chiliz and in XTZ. I do remember this one because I didn't trade it very well. Why didn't I trade it very well? Anyway, it wasn't a loser, but it was annoying. Okay, Litecoin was another one. I thought, you know, if Bitcoin and everything is going to rally, Litecoin is normally a leading light. Litecoin should lead the way. Litecoin was also at a really good level, and we were holding this. Let's zoom out and I'll show you why. First off, we were holding above the weekly 200 moving average, which we still are. That was really nice and bullish. Also, if I measure this correction from this high to this low, project it from here, we were holding the 61.8 level here at 111, and so that's why I liked it. But now we're underneath it. This was a scratch because it did move, you know, from this was the 31st of January where we recommended it. If you had bought the closing price that day, it would have been 109.54. We went from 109 to 144. So yeah, again, you know, it did move 25-30%. But then it lost that 50 moving average. When you see here, these 50 moving averages, they're pretty strong support and resistance, like here and here and here and here. And when you get above one and you look to keep going high, you shouldn't go back underneath it again. It should become support. And as soon as you do, and it's all over, unfortunately. So that's what happens here. So even though this moved 25-30%, it's still a scratch, really. We'll count it as a scratch because it shouldn't have been a loser, but it wouldn't have been a massive winner. The other one I really liked was Link. Link. Link is another one. Didn't go very far. Did go up. Came all the way back. Now it's underneath. Link is a scratch as well. So, still in a downtrend. Now, do I still like Link? No, I don't so much at the moment. So, this is the weekly chart. Let's see where we are in terms of measured moves. We can get a little bit more history, can't we, for Link? Let's do this. There we go. There's our 200 moving average on the weekly. A little bit below where we are. Now, if this was a funky, irregular correction, then the reason we liked Link here at the end of January is because we were bouncing off this 61.8 extension level. So we would have had an A, B, C correction where the C leg is 61.8 of the A leg. Pretty perfect. You know, even if we did it here, you can see that our 31st of January candle was a lovely green bullish hammer off the low, which failed. So I feel like, yeah, I'm not going to be, I need to see some really good support now if I want to buy this one. That weekly 200 moving average, maybe these previous lows. What would fib patterns tell me? Let's zoom out to the low, 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 high, high, high. There we go, 786 fib. Let's see what happens on the retest, because I think if we make a double bottom and then we bounce back above that 61.8 level, I might be interested, or these daily moving averages start flipping. But at the moment, yeah, I think Link, just like Bitcoin, just like Earth, everything else, is setting up for a retest of the lows. And if we're lucky, we will get one of those, you know, typical crypto, slightly lower low, false breakdown, sharp reversal, sharp move higher, move here. If that happens and we got above those moving averages, that would be a really good look for Link. Okay, so the 5 coins that I've got my eye on now that, you know, it's very hard in these tricky times. So please trade carefully, use stops, be careful with leverage, etc. Okay, so the first one that I'm going to look at that I like here is Funfair. If I put my stops on from the low lows to the high highs, you can see each one of these fib levels, we had a really spectacular bounce. So this 61.8, we went all the way up here. This 786, we went all the way up here. Here we are, the next one, which is the 886, and we made a pretty good rounding base here. So how does it look on the daily? Are we still making a pretty good base? I think we are. Not only that, but we have bounced and got above these daily moving averages. So for me, if we have a little shallow 3-wave pullback and hold these moving averages here, make maybe a little head and shoulders pattern. I like Funfair. I like it because we're above these. And so my first target would be back to the 786 fib and the 200 moving average. Okay. And that target then is 1550. And if we fail there, get out. Because we could make a much bigger, with everything that's going on, we could make a much bigger head and shoulders pattern here, couldn't we? In Funfair. But that's what I would be looking for my first target. 1540. This is Funfair Tether. So I'm not going to buy it tonight. I'm going to wait to the weekend or next week, and I'm going to look for this ABC, and that's going to be my entry in Funfair. I'll try and let everybody know. And another one that I really like, because it's really right at that level where you want to buy it, and right as close as you can be to where you're wrong, is Nia. Let's take a look all the way to the end at Nia. So here's Nia. big bullish move and a pullback. And see how we're right on these moving averages and stuff in the middle here. On the daily, if we put our Heikin-Ashi on and wait for this, you know, nice big green, that should happen. But it looks pretty good on the daily, on the ready. So what I'm waiting for here is this 4 hour to turn up bullish again. And yeah, I think then we've got a pretty nice long setup. I'm going to put my fibs on the other way, and we'll look for potential targets, and we'll see where we're bouncing from, and make sure that that's, perhaps I should do the low here. Okay. So we're bouncing from a 61.8. We're holding above this 50% level, 10.41. I think as close as you can buy to 10.41, which is right where we are now, is where you want to buy. And then the first resistance is going to come at 12.74. What very often happens when you do this 61.8, 38.2 thing, the golden ratio trade, is you will come back and test that 50%. So we might do this. And you can see what a big, important pivot level this is. So be prepared for that if that happens. But I still like NIA to make a bottom around here. And above 12.74, I'd be looking for 15.6 next. So NIA, really do like how we've got support from these daily moving averages. And hopefully this 200 moving average, and we can bounce from here. And even if this is just a B leg in a correction, so if this is our, imagine if this is, instead of being 3 waves of correction finished and a new upswing, this is just a big A or 1, and we're going to do B and then C. You know, even if we do that, we should get a really nice trade anyway. So we've got a higher low, now we need a higher high, and we've got a little bit of an uptrend going on for NIA. So 12.9 first target, 15.8 second target. Now I've drawn those correctly. Atom is another one that I think is potentially, let's take a look at Atom on the weekly. So a couple of things are going on here. So clearly we're in a correction, we're in an uptrend, we're riding our moving averages higher. I'm not a huge fan when you come back into the previous swing, but that's fine. So I'm just going to tidy up, and we'll take off we'll put regular candles on here on the daily. So what I'm looking for here is just a basic 3-wave correction. I'm looking for this 3-wave correction to be over. So if I measure from here to here, project it from here, I think we have tagged it. Sometimes though, you retest it, or you do the 1272, or, you know. Now, if that's the case, then this potentially, let's hide these moving averages for a minute, because they are, let's see, potentially what we would like to see here really is a little head and continuation, head and shoulders pattern. We would like to see this turn up. So that would be my trigger. So first resistance would be a retest of the highs at 43.55. Second resistance target would be 70. So, and that's because these fib levels have been really working. If they're not resistance, then they're support. So 70, 69, 69 basically would be the next one, and then obviously we'll keep going from there. But for this next swing, that's what I'd be looking for Atom. So we're looking short term on that little 4 hour. See if we can make a 4 hour inverted head and shoulders pattern here. And if we can't, obviously, and we lose this level and we go back to the lows, we're going to look, it's still in a downtrend, and we're going to be patient. And this is not the long setup we were looking for. So that's my view of Atom. I tweeted the picture of Haven today. So Haven, so let's look at the weekly where we are. As you know, whenever you get under previous lows, they can be resistance and they can hold you down, and you kind of keep going down. So like these previous lows, weekly closing price here was our resistance, and kept us down, 5-6 weeks in haven underneath these previous lows. Today was a big blowout move that put us back above that support and resistance level, and so now I'd like to see it hold as support as we go up. What I also really like is how we've blown out above these daily moving averages that were holding us down the last couple of days, and a bullish cross of these moving averages really means our first target should be back to the 200-day moving average here. We might then have a bit of a pullback here. If you look at the level, we've got some highs and lows here as well, and then our first target, second target after that, so that first target is going to be around 5.5. Second target after that is going to be around 8.3. So I'm not going to buy it here. This is a really long tail. This says profit taking, so I'm going to wait for this profit taking to be over. I'm going to look for a three-wave correction kind of back to that support, or I'm just going to wait for this correction to be over and this turn up again, a nice hourly buy or a nice 4-hourly buy. So that means we need a few more group reds, a bit of more of a pullback for me, and then a 4-hour buy. And I like Haven. I like it when I'd like to see some red candles and then it turn up again. Okay, so we've got our targets 5.5 and 8.3 in Haven, and that's where I'm going to buy the pullback. Hopefully that one works, and we'll go from there. Above that 2.36, we've got lots of lovely upside. And then the last one of my extra picks is KDA. Let's find KDA. Here it is. So a pretty similar pattern, KDA, big picture. I like this as a big three-wave correction. We had a big three-wave drop, three-wave rally, three-wave drop to this 61.8 level. So we measure from a high here and so on. Now, we had a really pretty good bounce of it. It did all that thing through all these moving averages, but here we are, we're all bunching them up. Whenever you get your moving averages bunched up like that, when you finally break out, you get a really good move. Like, let's go back to the bottom here. We've got one of those charts. I know. So here, when we get all bunched up and we're going sideways and everything's flat, just like Haven's just done, we get a really big move. So that's what I'm looking for. Now, it is all looking, I'm a little bit nervous that this is all corrective, and can I count this as 5 waves or not? But sometimes the first wave one can be misleading. What I am clear about is this is a really nice 3-wave correction here in the middle, right? There it is, almost equal, isn't it? If we go like that. So if this was a new upswing, and this is our wave 1 and wave 2, and now we've got wave 1 of 3, this next swing should be the really strong one. So I'm waiting to see, can we close above this 200 moving average, make a new high, and start our really strong move higher. At the moment, yeah, it's looking a little bit uninspiring. It's looking a bit like a sideways range, isn't it? Very often, the 50% will be the level in the middle that's getting us stuck, and that's exactly what's happened here. Here's this 50% level through the middle that we're stuck on. So back above that would be a pretty good confirmation that we've broken the duck and we're on our way higher. But at the moment, yeah, I haven't got an entry for this one and I'm stalking it. But I do like it big picture, KDA. So I might wait until it gets above this 200 moving average and then buy the first pullback I can grab. I think that might be a little bit safer. So where are we going to have as targets? Because we can't use that. So we'll just use retrace targets. So moving averages, once we get above them, let's make sure we haven't got any weekly moving averages above us. No, because this is the 20. So we're going to look for a retest of 10.02, which is the 236 fib, and a close above 10.02. We're going to have 13.5 and 16.34 as our targets. So KDA, hoping this is the bottom that we're looking for. And then finally, I don't know, is this lawsuit with Ripple ever going to get sorted out? Just because Ripple could be the lottery ticket. Now, let's have a bit of a tidy up of my chart here. Okay, so this was another perfect ABC correction. This swing was 61.8 of this swing. And so everything really is lined up for Ripple to bounce from here. We had a pretty strong first rally. Got stuck at our weekly moving averages, unfortunately. But we've been in this pretty tight, I don't want to call this a breakout really. But this is looking, you know, when you get above your daily moving averages and then you find support from them and turn up again, I think it looks pretty good. I would almost say this is a head and shoulders pattern with a sloping neckline. And as you know, I'm not a big fan of sloping necklines unless they slope the opposite way to the way you're going. So this one slopes down, we're going up. So I don't mind this one. So I would say that that level might give you a bit of trouble, but I prefer horizontal levels and this one. So this red dashed line, and I think the 200 moving average. So I really do like this one. I think it's just turning up in Ripple. I should have put it on my list at the beginning. I apologize. Putting it on now though. So Ripple, I think we could buy a little pullback entry here after this big move, couldn't we? Just really need to see it make new highs. And then we're out of the mud here. Yeah, there we go. Come on, Ripple. In fact, I'm going to buy some Ripple tonight. I like Ripple. I think it's, yeah, got a good shot at retesting these highs. Now imagine this is just a correction here off the lows. Where might Ripple fail? Okay, we'll measure from this high to low. We'll put it from here. We might fail at 0.84, but more like I think we get up to this high here, 0.989, the 200-day moving average, and then if we came all the way back from there, that would mean that this is just 1, 2, 3, you know, 4, and we still got another leg lower to go in Ripple. So those are the two levels to watch out for, 0.8489 and 0.989 in Ripple. But yeah, I think the momentum's turning our way and I like it.